Here we go. All right, everybody. Stocks by the numbers. Welcome back. And I just wanted to do a couple of updates quickly on some earnings that we got out and also just some news that hit on one or two stocks. But let's look at Smith & Wesson real quick. Smith & Wesson SWBI here on the NASDAQ. Stock recently dropped down to the low nines after these earnings came out. 917 new lows, bounced, and almost looked like it wanted to fight and get back to that $10 mark. It's right at that bottom trend line there that we drew out, had the quick break and then pop back up. Markets, though, of course, have been volatile, but we could get a retracement maybe back to the mid of this range here, maybe about 10 and a quarter, and potentially meet up with that 20-day moving average. See, the good thing about this stock is the beta, of course. The beta is the volatility of the stock in relation to the overall volatility of the market. So as we see here, very, very low beta, right? And even when we initially got the report, it was a big drop. But again, we saw the stock run up to 11 plus, and then we had the big drop. So percentage-wise, it was, a chunk, of course. But realistically, from where we first started looking at the stock in kind of the low to mid tens, now you can see the stock just basically immediately back to the high nines, going back to 10 probably. I think, in my opinion, believe it or not, I still stand by my analysis that I just think the overall situation, the company is undervalued. So it really depends on how long you'd want to hold it. And, if you just feel that you might want to sit in cash or potentially look for another position, because the hypothesis, if you will, behind my thoughts is that this is a brand name American company that I feel is undervalued in general, and they pay you a dividend to own it, right? So technically, we missed earnings. As you see, the company reported 2 cents a share. Estimates were 3 1/3 cents. Revenue been dropping, and they're citing lower guidance, weaker demand moving forward now for the next couple of quarters. You can see revenue missed by about 3%, 3.5 million, 115.89 million. Estimates were 119.46 million. So they missed by just a couple of million. It wasn't a big miss, but of course they kind of lay out that sales are dropping and, demand is down. Although they did say, I remember when we looked at the previous quarter, I believe they said that their newer products, the newer product line, was kind of popular. And I believe it was, I want to say maybe like 40% of their revenue. Don't quote me, but you understand my point. So in the long term, I do think it could still be good. But again, if you disagree or if you took a position and, you just cut it for a small loss, like we said, and you'd rather find something else, it's understandable. But in my opinion, I do still like it. And I wanted to point out also, Lake Street, you can see a couple of days ago came out, they cut their price target from 13 to 12.5. 12.5, right? So that's what I mean. Even lowering their price target on a weak earnings report and citing potential further weakness coming over the next year, they still feel the stock is worth roughly 25% more than where it's currently trading. So that's why I say, again, a situation like this, my main concern, believe it or not, even though they did cite weakness moving forward, my main concern would be just keeping an eye on that dividend. Keep an eye on that dividend. And if you see that all of a sudden, like, it doesn't consistently grow and starts plateauing, then maybe the company could be running into some weakness. If they mention that they're going to cut the dividend or lower the dividend, that is cause for concern. In my opinion, you should sell immediately if you hear that, because that's what a lot of the larger position people are going to be doing once they hear about it. So, in my eyes, that's really the main thing you want to keep an eye on here with Smith & Wesson. But, again, we crunched the numbers last time, and I do feel it's undervalued. And when we looked at the equity, we look at the revenue coming in, 400 million and change. Company has a market cap, 400 million. Low PE down here, sub 14. Again, low beta, pays you a dividend. So it checks a lot of boxes, even though some of the numbers have been slipping. As we see, net sales decreased 16% year over year. Gross margin 24% compared to 28.7% a year ago. while our new products continue to perform very well, right? What did I say? We are seeing lower demand for our core product portfolio, which is negatively impacting both our top line and margins. Company still expects annual revenue to be 5 to 10% lower than fiscal 24, consistent with its guidance last quarter. Average estimates called for, okay. U.S. Supreme Court signals sympathy towards SWBI and distributor Interstate Arms to throw out the Mexican government's lawsuit accusing them of aiding illegal firearms trafficking to drug cartels and fueling gun violence. Well, that's good. Reports contrast with Stern Ruger 2 weeks ago posted rising revenue and earnings and boosted its dividend. So, a firearm stock. I mean, of course, we did mention it could be cyclical. Again, I laid out, I remember going into the elections, I laid out that something like SWBI could work out well and show you some growth no matter who won the election. So, I mean, it is kind of situational, but again, overall, in my opinion, I do stick by my analysis and say it's undervalued. And again, that's why you saw that analyst come out and say, yeah, not 13, but 12.5. And again, you can see that's a couple of points higher than where we are right now. So we could see a retracement back to this moving average, potentially this 200-day moving average at about 12.5. And we could meet up with that mark. But again, it might take some time, because we immediately kind of got some crappy news. But MACD obviously heading downward, but again, we could potentially start to curl and flatten here if we get back above that bottom trend line and start to climb back up into the 10s. We looked at the mid-range, was about 10.25. You can see 50-day moving average, about 10.46. So we could have some movement there. The RSI was kind of beaten up. It's sitting here at 37, so we could climb a little bit. Weekly RSI, again, we just had a little bounce, and we did technically just get back to this bottom line, but again, we could reject here, right? And on the weekly RSI, again, we technically haven't hit that 30 benchmark yet since this big sell-off and hitting the new lows. So we dropped and we could potentially kind of channel up a little bit and then drop again and then bottom out, curl, and then come back up. You understand? And also you can see the MACD on the weekly potentially getting ready to meet up and possibly cross to the downside. But I don't know. Again, it's been beaten up. It's been selling off for quite some time, as you see here, basically a year straight. And I understand the numbers are slightly weaker than where they were back here, but overall, I do still say the company's undervalued. So even if we do happen to break and really drop down to the low 9s, make new lows or high 8s, I do think it's short-lived and it, eventually pops back up. You can see how we drop and we kind of rebound back to where we were, and then the earnings have been kind of weak. But you understand my point. RSI on the weekly down here at about 32.5, so that's why we could potentially see a rise and another drop and then a bounce. Another company, ARCO. ARCO, again, this is the McDonald's down in the Caribbean and South America, right? That whole market that we were talking about. And cheap stock over here at $8.22, up 42 cents today, about 5.33%. Just reported earnings. Market cap $1.7 billion. We get paid a dividend to hold it. And again, look at that PE, very, very low PE. And we definitely beat the stock up. We technically are still in this long-term downward channel. And the difference here on this earnings, as we see compared to some previous earnings, is that EPS was light and the revenue was consistently growing, which is why I said, in my opinion, I like it. Here, we have the slightest revenue miss, as you see, by about 8 million, or roughly 0.7%. They come out and post 1.14 billion. Estimates were 1.15 billion. However, now we flip the script on the profitability side of the business, and you can see a nice healthy beat on the EPS side. The company reporting 28 cents a share. Estimates were 21.4 cents. So they beat that by over 30%. And the revenue, again, basically kind of in line with what they needed to hit while increasing profitability and upping some of these margins. Right? So overall, I say, again, I actually do still like ARCO as well. And I know this could be one that is potentially making you impatient, right? But again, as we looked from 2020, the big drop-off after the lockdowns, essentially 4 years straight, right? The stock did nothing but climb for the most part for almost 4 years straight. And you can see going from, two and change, $3, all the way up to 13. That's a big percentage climb. And now we're in this downward channel, right? So people might be getting bored with it, might be losing confidence, might be losing faith. But again, in my opinion, this is how it works sometimes. You go on these big run-ups, right? Now it's been consolidating for, a year, 15 months or something. What the heck's this stock doing? You know what? I'm just going to sell it. I see other stocks climbing. And then, we go from the downward channel, and then boom, we might pop back up and get back inside this upward channel, right? So unfortunately, this is how it works. And you don't immediately get the results that you think you should get or the stock deserves. But if we look at the actual report, it was pretty decent. Arcos earnings. Revenue technically down from 1.18 billion a year earlier, slightly missing the mark. Again, so I could understand if they're not like, oh, we got to pop it back up to 11. Kind of understandable. But at the same time, I still like it personally. I don't think there's much to worry about here. Let's see. Total revenue, $4.5 billion for the year. Its highest annual result in US dollars. Digital channel from app delivery rose 18% year over year, contributed 57% of system-wide sales. Loyalty program had 15.8 million registered users, adding 12.6 million members versus the prior year end. So we know it's, they're slowly building, right? They're slowly building this pool of McDonald's locations. Again, down in the Caribbean and South America. So it's a slightly different McDonald's play, obviously, for much cheaper per share. You're getting some exposure to international market. You're getting a dividend, right? So could be a good position. I do still like it. Net income almost 150 million for the full year. EBITDA, company's strongest US dollar results for each period. That's what I mean. If you really dissect what the company is reporting, it all seems like it's on the up and up, right? The one slight drop was the revenue this time last year was 1.18 billion, and we just got 1.14 billion. That really seems, in my opinion, to be the slight negative here. That's good, though. The loyalty program, right? They're getting people on the apps down there. Because we know it works well here in the States. People always tell me all the time, anytime I mention McDonald's or anything, they're always like, oh, you got to get the McDonald's app, and, they give you, like, free fries and stuff. So, apparently, it's keeping customers loyal. Adjusted EBITDA rising 11%. EBITDA margin 12.9%. Company opened 29 Experience of the Future restaurants in the quarter, including 26 freestanding locations and 15 new units in Brazil. We know Brazil is a pretty large market. Strong local currency growth. Comp sales rose 32%. Okay. And again, you can see most of these fundamentals up year over year, right? Quarter over quarter. That's what I mean. That's why, in my opinion, yeah, the stock might be quiet. We might continue to consolidate in this downward channel. But overall, in my opinion, I always say, follow the numbers. Restaurant openings reach 85 new units. CapEx totaled 327 million for openings. I guess it's not that bad. Resilience, perhaps 24 is the best example of how the company's geographic, economic, and operating diversity allow us to outperform in just about any environment. Right? And we know this. It's a brand name, right? It's McDonald's. So, again, could we occasionally slightly miss our mark? Could we slightly beat our mark? Yeah, of course. But that stability for the most part should be there, right? Okay, talking about EBITDA. Mexican peso depreciated strongly. We are very proud to have reached these important milestones. 4D strategy, digital delivery, drive-through, and development. Our pillars: strong, stable balance sheet, healthy leverage ratio, and no significant debt maturities in the next 4 years. You want that financial health. I said also a while back, again, I know I say things randomly throughout videos, so I'll, everyone misses everything I say, which is fine. But I have said that I said that under Trump, in my opinion, fundamentals are going to ring true. I know the traders talk about the technicals, but now moving forward, you're already initially seeing the response with earnings, with some of the earnings with what some of these companies are reporting. If it's not perfect, a nice beat across the board, strong fundamentals, if you don't have a healthy balance sheet, if you're not holding a decent amount of cash on hand, if you don't tick all of those boxes after an earnings report, the stock's going to drop. So now I feel under Trump, it's all about the fundamentals. So when trading or investing, in my opinion, I think it's all about PE hunting. And again, something kind of like a SWBI, kind of like an ARCO, like a smaller, cheaper stock that could be viewed as undervalued in the numbers that will eventually climb up and rebound for you and kind of show you that quote-unquote stress-free growth, if you will, right? Kind of like you shouldn't have much to worry about, just park it here. If it drops, you can add, give it some time, and you should make yourself a decent return, right? In theory. Okay, we're breaking this down. Okay, I just wanted to quickly just drive through the numbers, but ARCO seems steady. Again, SWBI, a little rocky, but overall I think it's undervalued. Loyalty program in Costa Rica. I just wanted to see total restaurants up, maintained. Very nice. Cash on hand. Okay, less cash. We have less debt though. Due to the lower cash balance, net debt was up. Okay. Operating activity cash. $90 to $100 restaurant openings and total capital expenditures of $300 to $350 million expected for 2025. In January, Fitch upgraded ARCO's corporate and senior debt rating to BBB negative, investment grade, from BB positive, which I believe is speculative. I'm sorry, I don't remember exactly the table. To support the upgrade, Fitch cited the company's continued strong performance and robust liquidity, improvement in their leverage metrics, and comfortable debt maturity profile, supporting the execution of its growth strategy with strong geographic diversification and increasing EBITDA generation from investment-grade countries. I'm telling you, man. I'm telling you. This could be a good one. I just wanted to double check. Do we see equity, liability? Here we go. Assets. Total current assets technically dropped. Liabilities down slightly. Equity, technically slight drop, as you see, from 515 down to 508. But I still like it. I still like it. And if we just quickly check it here, this is already taking longer than I wanted to. I'm going to speed it up here. I do think it climbs back up to the 880 range. You can see top Bollinger Band, 882, 50-day 885, staying above the 200-day and bouncing off of the mid Bollinger Band as well. On the daily, we can see 200-day 858, top Bollinger Band 868. So in my opinion, it's back up to the high 8s. And also, again, we had this key level that I pointed out in the past of about 873. You can see fib here, 863, right? So we have, if we climb up right now, look, you can see we're meeting up with the Bollinger Bands, the moving averages, the fib levels, the top end of this range, back to the key level of 873, right? So we can start to see that over the next day or two, and believe it or not, we might begin to break up and out. So we may be approaching that key point. Again, looks like about a 5-6% move. That could happen over maybe the next day or two if markets don't completely tank. So ARCO could be gearing up and setting up. I do like it overall though. Daily RSI 57.5, weekly RSI 50. Right? So we're technically not overbought. We haven't exploded too much since earnings, so we can possibly continue just kind of that slow and steady climb and start to test some of those higher levels. I wanted to mention also Intel very quickly, new CEO. Intel, we can see some after hours action. Stock shoots back up from about the 20 range up to about 23.5 immediately. Actually looks like potential bull flagging taking place, but you can see Lip Bhutan, new CEO over there at Intel, sees significant opportunities to remake business, and honestly, probably going to start to turn it around, right? Anytime you bring in someone fresh, you kind of, sometimes it takes that third party, right, from the outside looking in, to step in and say, no, you're making this mistake, you're making that mistake. If you focus here, it'd be better, right? Focus more time over here in this segment, and you can knock it out of the park, start to see increasing revenue, up those margins, right? So sometimes you need a fresh face, you need a fresh mind to come in. Obviously, markets like this, stock reacts positively, pops over 10%, right now sitting in the high 22s. And I still say overall, though, I do still think personally there's value here. Again, we were seeing the potential rumors about Qualcomm coming in and absorbing some of the assets of Intel. Now we got the CEO coming in talking about, no, there's opportunity here. You know, I can turn this around. I can right the wrongs. So I feel that, believe it or not, Intel, I think goes back to the bottom of this trend line. My personal price target on Intel right now is at least 30, and I think that's conservative. And I think if we look out 2-3 years down the road, I really don't see an issue why this stock can't get back to like that 50 range that it was hanging out at for so long. Yeah, we have to go all the way back here. But again, you can see, you know, we came up, we were in like the mid to high 40s, and we were just holding that for several years, right? And then coming out of the lockdown, we started to lose market share, we were missing revenue, and then we really started to sell off and chunk down bigly. So financials are a little bit of a mess right now, but overall, whether we're talking about a buyout, whether we're talking about a potential rebound story, I still say, in my opinion, Intel as well, the last time we crunched the numbers, I feel is undervalued in the long term as well. So I think that actually goes to 30. Again, I'm trying to be conservative and realistic, but we know how these stocks move, right? One big announcement, the stock could shoot up to 29 or something, right? Then we have to reevaluate the whole situation. So yeah, you do have to take it day by day, week by week. But Intel overall, I do think is undervalued. You can see we were really beating it up. Bounced nicely off of that support trend line. I may have mentioned that previously in the Discord or in a video. And you can see we came down, had that bounce, and now we have this news, which brings us basically back to the 20-day moving average, right? So we might continue up and up now. But we're 22... Okay, so we're essentially right here at the mid-Bollinger Band at the 20-day. That'll bring us back above the 50-day moving average, which should technically fuel bullish momentum. 200-day, moving average here at 23.99. That should be the next stop, in my opinion, in the short term. And yeah, I think maybe, you know, you give it a month or two, you might, again, see this trending and see money pile in now on the news of the big sell-off, the discounted price, and the new CEO coming in. So now you might see money coming in. Oh, excuse me. And believe it or not, you might see the run-up back to like 26, 27. You might see the top end of this range. MACD now is going to start, you know, curling, bottoming out, and coming back up on this news. RSI on the daily, about 44 and a quarter. Obviously, that's going to pop up in the AM, but again, you could have people piling in for the long-term fundamental rebound right now. So the RSI could even get overextended for a couple of days now on this news, believe it or not. Weekly MACD was slowly kind of flattening out. Now we should see a little bit of a pop. Choke. Take a sip. Yeah, the daily was what, 26 and change. You can see the 50-day moving average on the weekly, 25 and a quarter. So I do think like 24, 25. It might just keep running there, and then maybe cool off, pause for a little bit. But I do think money continues to flow into Intel now on this news. RSI on the weekly, basically same thing, about 44 and a third. So we have room. We have room to climb. There was something else. Oh, Sentinel One. Sentinel One, ticker symbol S. Company came out, broke my heart. Actually reported a pretty good quarter here. You can see EPS 4 cents. Analysts were expecting about 1 1/3 cent. Really nice beat. Revenue comes in above that mark, 225.5 million. Analysts expecting about 222 and a quarter. So they beat by about 3.25 million. So nice beat there. However, the guidance was slightly lower than what was originally on file, and we chunked the stock down. Again, what I just said, right? You need to have good EPS, good revenue. The guidance has to be in line or above estimates. You have to have a decent amount of cash on hand, right? You can't have debt climbing or outpacing your cash flow, right? All of the healthy fundamental boxes have to be checked, in my opinion now, under Trump, in order for a company to see a pop. And what you're seeing here was, yeah, we beat this quarter, but oh yeah, moving forward, might be a little lower than what you guys were looking for. Boom, that's it. We tanked the stock. We drop it down. So Sentinel One had a nice little rebound, was up to about 19 and a third. Now down to the low 16s on this news. Cybersecurity company said it expects revenue 228 million, missing the 235.4 million that analysts were expecting. For fiscal 26, the company forecast sales of about 1.01 billion, also below the 1.03 billion that analysts modeled, right? So a slightly lower estimate, and boom, we just chunked it down 15% in value, or whatever it is, right? So overall, in my opinion, over the long term, this is another company that I feel is actually undervalued. I know I laid out a bunch of trend lines. I mentioned it on X, and I was mentioning it in my Discord as well, that I laid out those trend lines. I was saying, in my opinion, if you can start to build a position, piece your way into this one at around the $20 level or at the high teen level, I think it would be a decent buy. And again, we just saw the stock take a leg lower down into the 16 range. But in my opinion, over the long term, I do still like it. And again, almost similar to what we saw with Fubo, right? Right now, we're slightly below what analysts initially modeled for. But over the next 1 to 2 quarters, if they're able to slightly beat estimates, just like we saw with Fubo, they might then come back and say, oh yeah, that old guidance, we're going to hit it no problem. We might even come in above it, right? So over the next 1 to 2 quarters, you might completely see this whole guidance path turned around. So in my opinion, I still like them. I would stick with them. If you did buy recently, of course, again, the stock just dropped to 16 from 19. So, believe it or not, in my eyes, I would consider adding more. I would consider adding more for the long term. But again, that's just me. That's just me. If you say in the comments, yeah, a little bit of a weak guidance because I feel this stock or this stock might be a better play, that they're my cybersecurity personal pick, right? Obviously, you could leave that down in the comment section, share your thoughts. But we were looking at the consistent growth in revenue in Sentinel One, right? And now we have, pretty decent EPS as well. So, in my opinion, I would kind of, right now, overlook the slightly lower guidance fact. And I would cross that bridge when I get to it. In the fourth quarter, loss of 70.8 million compared with the loss of 72 million a year earlier. Okay. Company had more than 321 outstanding shares compared with about 301 million outstanding shares last year. Okay. Again, it's nothing. It doesn't seem drastic to me, right? And I know people might point something like that out and say, "Oh yeah, no, is that a bad thing? Is the stock going to continue to drop?" I can completely appreciate those concerns. And again, this was another stock that technically was on the up and up for a while, right? And now everything's not perfect, so we're chunking it down, we're bringing it back down to earth. But in the long term, I think the long-term growth outweighs the short-term volatility, in my opinion. Adjusted earnings, 4 cents. Revenue increased 29%. Right? That's what I mean. These are the numbers, in my opinion, that are more heavily weighted. Annualized recurring revenue, ARR, rose 27% to 920 million. I think they were saying they're looking for $1 billion now. Yep. CEO says we're, quote, on track to surpass $1 billion in annual recurring revenue in fiscal 26. Revenue 228. Yeah, look at this. 1.007 billion to 1.012 billion. Analysts were looking for, again, higher for the quarter, 235 and 1.03 billion. So we chunked the stock down. But again, overall, in my opinion, I do still like it. I do think it's a decent up-and-comer. Again, revenue increasing. Quote, our strong finish to the fiscal year reflects solid execution, accelerating adoption of our platform solutions. On track to surpass $1 billion in ARR. Key milestone. For more than a decade, we've patented leading machine learning security models. Now we're pioneering fully autonomous AI workflows. Preeminent AI security platform of the future, delivered industry-leading growth, margin expansion, culminating in our first quarter of positive non-GAAP operating margin in Q4. We're focused on driving sustainable growth, improving margin. Again, revenue increase, annual revenue increase. Customers with ARR of 100,000 or more grew 25% to 1,411. GAAP gross margin was 75 compared with 72. Non-GAAP 79 compared with 78. GAAP operating margin was minus 36%, used to be 47%. Non-GAAP operating margin 1% compared to minus 9%. Net loss margin, GAAP net loss margin 31%. GAAP net loss margin was minus 31% compared to minus 41%. Non-GAAP net income loss margin 5% compared to a loss of 4%. Operating cash flow margin minus 2% compared to minus 4%. Free cash flow margin was minus 4% compared to minus 6%. So you can see again another situation where most of the fundamentals are slowly ticking up higher. They're moving upward. They're heading in the right direction. But again, that slightly lowered guidance, boom, that's it. You give them a reason, right? This is what I was talking about originally, when in my eyes we continue to have the fake, overvalued Biden market pump. Markets ran 50% under Biden when technically everything was going to crap. And the things that I was saying in theory over like that last year or so under Biden, where it may have looked like I was wrong, now that's all coming to fruition now under Trump. So I may have been a little early, but at least you can, I'm sure you can appreciate my mind was in the right space. Cash, 1.1 billion. Very nice, right? Cash on hand. Beautiful. Total revenue increased 32% to 821.5 million compared to 621.2 million. We're on the up and up here. Again, we're on the up and up. And yeah, slightly lower guidance, but again, just like we saw with Fubo, you may need to give them a quarter or two. All of a sudden, if they beat slightly in the next quarter and then they beat slightly the quarter after, boom, all of a sudden, oh yeah, that original, revenue guidance, we'll hit that mark. Don't worry about it. Everything's fine. We are on the up and up. Statements, forward-looking statements. Okay, blah, blah, blah. Let's just come down as well. I just want to double check. Yeah, let's check our assets. Total current assets. Big drop there, actually, of about 200 million. Total assets slightly up from 2.32 billion to 2.4 billion. Liabilities up about 10 million from 727 million to 737 million. Equity slight increase from about 1.6 billion to 1.67 billion, we'll call it. Cost of revenue, let me see, revenue up. Yeah, revenue, percentage-wise, revenue increase outpaced cost of revenue. Oh, just sneezed. Just held in a sneeze. I don't know how healthy that is. Might pop a blood vessel or something. But yeah, equity seems in line. Again, a lot of the fundamentals we were looking at on the up and up, cash flow, non-GAAP margins. So, in my opinion, I like it. And again, this is why I love my trend lines. This other trend line I had drawn out, going from the low of June 6, 23, cutting across the bottom body of that drop right there on May 31st, 24. Cutting right across, and you can see, look at that. Boom, right to that line. So technically, again, this is our long-term support level here. So this is a key level. Obviously, you don't want to see it drop below that level, but in my opinion, if I liked it around here and I was waiting for this mark when we were looking at it like here, I was saying, oh, if this thing could sell off, you know, that'd be much better. And it did, and then obviously we dropped even further. But we really should, if it wants to hang out here and kind of tease, it could, but then it really should bounce right back. It really should. Again, they're guiding for about $1 billion for the year. We have market cap $6 billion. We just looked, what, equity was like 1.7 billion. Cash on hand was $1 billion, so that's 2.7. And $1 billion in revenue, right? So we're up to 3.7. So at 19, we were trading less than 2 times, in my opinion, quote unquote, fair value. And now obviously we're down another 12, 15% or whatever. So now we're down here into the 5s, the high 4s. So in my opinion right now, we're kind of valuing this at like 1.4, 1.5 times quote unquote fair value. So in my opinion, I actually like it even more. And while it may be kept down in the short term, I do think in the long term, I think you have the bounce, just like it came out of the gate. They sold it off, they beat it up, and then look at that big, healthy bounce it had. And then they dropped it all the way back down to support, and then look at that big, healthy bounce it had. Right? So we drop it down, beat it up to support, and then boom, hopefully we see a nice, big, healthy bounce. Easily back to 25, 26, even if we make lower highs. Right? If this is our resistance now, 30, 70... 6. So let's say, right, even if we go, yeah, see how we have a little bit more action right around there. So let's say we go like here, hypothetically. You can see if we come down and now we rage and we bounce, you can see 27, 27 and a half, right? Even back to a fib or meet up with one of these trend lines here, 25 and a third or something, right? You can see my point. So believe it or not, in my opinion, I still like it. And, short-term volatile, long-term, I do think the growth is there. Again, a lot of those numbers moving in the right direction. RSI is now going to drop down. It was 36 on the weekly. So that's going to drop. MACD was slipping. RSI, yeah, was oversold. This looked a little extreme to me, but again, I know that markets, when they get volatile, people start jumping ship. Sometimes stocks we think are going to hold a level, see that flash crash below a trend line or something, and then it takes, a day or two for them to bounce back. But RSI on the daily 34.5, so it's probably instantly, you might see a situation, believe it or not, where it opens. See, even now it's slowly climbing up. It's trying to get back to that trend line. So believe it or not, it might open like down here. And then because the RSI may look so oversold on both the daily and the weekly, you might have traders or even long-term investors saying, no, now's the time for me to swoop in, start to grab some shares down here and ride that rebound. So you might see a situation tomorrow morning where right at market open, we're down here near the line, and you might just see like that slow, steady rise throughout the day. And it might stay down, but it might slowly rebound and start to climb up immediately, bouncing off that support. You understand? So something to keep an eye on, but I just wanted to go over what a couple of these companies said. And again, the Intel move, the news, because I know that I recently spoke about them. I spoke positively, in my opinion, and they're all kind of down right now. So as you guys know, I'm not hiding from anybody. Jumped on, wanted to make a video, wanted to recap a couple of those stocks, but that's pretty much it. I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. Subscribe to the channel. That's our handshake agreement. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.